Hi guys, welcome back to Marantz Rantz. Plenty of good information, a little bit of motivation, a whole lot of truth, no financial advice. Just want to thank you guys for coming on back again. We're going to recap the earnings report that just got released. I know that the 10Q became official and I started reading into it today and I found some money. So I want to go ahead and explain that to you guys, why it's looking so great on the balance sheet. The big announcement obviously was that Ryan Cohen's the executive chair. And what does that mean? He's going to be in charge of pretty much everything they do. And I already thought he was, just personally, but now it's official and it's on paper. So this is Ryan Cohen, guys. If you guys don't know who he is the inventor of Chewy.com, one of the founding fathers of that. Additionally, he's with GameStop. I'm going to give you guys the whole breakdown of what I think he will do and where I think the company can go. We'll do that at the end of the video, but let's go ahead and get into the money that we found on the balance sheet. So here you go. First one is going to be this. It's going to be assets held for sale. So right there, somewhere on that damn 10Q, this is listed and it tells you during the fourth quarter of fiscal year 2022, we committed to a plan to sell the property in our Europe segment consisting of warehouses, buildings, land and property and equipment with a total net carrying value of $7.1 million. Now what they have agreed to is, and if I put it in bold, they agreed to sell off for $13.1 million. The transaction is expected to close in the third quarter of fiscal year 2023. So this won't happen for another 6 months, guys, but this is straight to the bottom line, $13.1 million. Just get ready for that. So that's where I tell you, like, there's hidden money in there if you really read the financials. This is $13.1 million. But quarter two is already looking great in our favor. I have a $50 million swing off jump, and we'll talk about that in detail as we go through. But right here, this is going to be carried over until the third quarter. So I hope you guys are aware of that. Just pencil it in now. That money's already over there. And last year on third quarter, we lost $91 million. I think we're going to come in a little bit better than that because we're going to get a head start right here with $13 million. All right. Next is this. Everyone's talking about net sales. But if you look at the net sales, the majority of losses percentage-wise come from Europe. And that's because the US dollar is strong, but the currency exchange rate for European funding, period, is very weak. We're closing all of our stores out there in Ireland, I assume, other countries, and I know we're still expanding in some portions of this world, but I'm ready to be told how many stores we're closing this year. Because we closed 68 stores last year, I expect us to close more. This year is the biggest year for renewals on the leases themselves. We have over 1,400 stores that are up for renewal. So we'll see how close we get to that number as far as how many we close out. If we can close out 68 and still fall flat on revenue, which we have been doing, we're relatively flat. But as you can see right here, operating loss in the U.S. was $26 million. That's all they lost for the quarter, guys. It's a hell of a quarter to have, certainly quarter one. And I want to focus down here at the bottom. This is GameStop Pro, extended warranties and subscriptions. The extended warranties, GameStop increased another $9 million, and that's at the bottom level, right? Operations level. Everyone working at GameStop, selling warranties, doing their best, that is a great markup for us. Those numbers won't officially, you have to live the longevity of the warranty itself before you actually get the money for it. But it's there on the balance sheet itself. There's also subscriptions, and the subscriptions have increased as well, about 7 million subscriptions. We know that price is going up to $25 for the Game Pro memberships. We're going to get a portion of that back to the bottom line. It's phenomenal. These are things that'll happen over time, and you'll get very little pushback. So I like the direction they're going with those categories. Next is going to be the marketable securities. We started out with $250 million. We now have it up to 255.3. Came down some to 253. Well, here's the thing. That just means we made $5 million in 6 months doing absolutely nothing. No work at all, $5 million to the bottom line. Keep doing this. GameStop, if you guys don't want to use your money for things, if you don't want to acquire things during, crazy inflationary time, don't. Do exactly this. That's a free $5 million, a free $4 million, a free $3 million. People need to start putting respect on what $1 million is, and that's exactly what you see here because the margins are tight, guys, and they are. But I also want to explain this. This is going to be hardware and accessories. Right now, we're at $725 million, one of the biggest periods I've seen outside of quarter four, right? So what does that mean? That means people were buying PlayStation 5s. They were buying Switches. They were buying Xbox. That's why your software is going to be down. People are loading up on the consoles this quarter. Now you will have more people with consoles, and you will have a bigger number on software this next period. I can tell you that just because based off of tradition, GameStop's actually flat. If you go back last year, quarter two, you're going to see software was less than this. Software was lower than the 338. Collectibles was lower than the 173. Hardware sales were lower than 725. So they're doing really well for where they're at. It's just an anomaly. Whenever you're coming out of Christmas and you're coming out of a time where everyone had COVID money and or the carryover of a child tax credit, so many reasons to keep shopping and not understanding that they were stuck in inflationary time. You know, you didn't know about inflation and the Fed raising rates until March and April of last year. We all knew that it wasn't transitory. We knew the route we were headed. And the reason why I tell you this is because GameStop has officially annualized on those inflationary numbers come quarter two. So I feel, this is just the way I look at the balance sheet, they lost $108 million last year, quarter two. They will come in $50 million or better loss. And so if they could turn a profit, it'd be phenomenal. And, you know, we give Ryan all the credit because he's in charge now. But I'm not going to dismiss Matthew Furlong and the ship that he got us through. You know, I'm a Dallas Cowboy fan, and some of you guys, you might get turned off on this point. But there was a quarterback out there named Danny White. And he got you from Roger Staubach over to Troy Aikman, and he was great for the time being. He gets no credit for it, but he did great. And in these little short 2 years, Matthew Furlong did great to hold us together. So I don't fault him for not being here, and I'm not saying that he was a bad guy or any of that effect. You know, he's a plant. I don't even go that route. Nope. I just love what GameStop does. I understand the business model. I understand they're transitioning and all the other stuff, right? The NFT platform, and then of course the game launcher that they're putting out there. That's all just added value. Even market manipulation, added value. Why are we here? Well, we're here because GameStop's fundamentally run the right way, great leadership, a tight book. I promise you, it's going to be great. I keep looking at it over and over and over. Do you know, this is just a little trivia question, quarter two, what was the cash burn for GameStop? Now, I know they lost $100 million operational loss. What was the cash burn? It was negative $400 million. That is not going to happen. It's not even possible, guys. They had a swing of $200 million on cash. They had a net swing of $100 million on operations, and that is great. That was a 62% increase on that. They actually did very well in SG&A this quarter. They had about a 500 basis points swing on percentage of SG&A of the actual profits. Guys, they're running the business the right way. It's the hard truth. It's the nuts and bolts. It's the stuff that you don't want to eat, you don't want to chew, but guess what? Eat your vegetables, players. We're making it. We're going to get it right. We're going to get it tight. It's GameStop. Can't stop, won't stop, GameStop. Figure it out. This is a great balance sheet, great company. You can't shake me. And I love Ryan Cohen. Get at me. Peace.